Hello ladies and gentlemen, welcome back to Dre's YouTube page. Today I want to show you guys how I do my charting using TradingView. Today we will be charting the stock Walmart. Walmart, it is ticker symbol WMT. So let's see, we're gonna go over here on TradingView, type in WMT and we are at the Walmart stock. If you watch my last video, I was charting the SPY, the SPY, which is the ETF for the S&P 500 index. That video is pretty sped through, so feel free to pause it and slow it down. But I figured this video, I'm actually going to give you guys commentary and explain to you exactly what it is that I am doing. So first and foremost, whenever I get to a fresh chart, I want to get a big picture view of it. So I normally come back to the 1 month, really the 1 week furthest back. The 1 month, you know, you typically don't have to look that far back. However, it doesn't hurt. So I want to highlight that there are 3 phases of the stock market. It's 3 phases, but it typically runs in 4 different stages. So one of those phases is a repeat. So the first stage is, say for example, right here we have what's called the accumulation phase, where basically the prices, it mellowed out at a certain price and is sideways trading, is accumulating, and then right after this phase comes the participation phase. And so some people call it the markup phase, because vice versa, you're going to have the markdown phase, which is also the participation phase. In some of the charting technical analysis books that I've read, it states that basically at this accumulation phase, this is normally when smart money is getting the jump on us. By smart money, they are referring to the big hedge funds, the big banks, you know, the big money in the stock market, the funds that actually move the stock market. So with that being said, first is the accumulation phase. Next comes the participation phase, which is normally when what they consider dumb money, retailers, us, we begin to participate because we start to see movement in that stock. We see that money is going into the stock, volatility is picking up, so we start to also buy into the stock and it increases, and eventually it hits a peak where it will start to go sideways again. And this is when we transition to the what's called the distribution phase, where we're going sideways but we're preparing for a sell-off next. Normally what happens is, and this is a small example, but actually it's actually a great example, from year 2011 to 2013 we went through our participation phase from we accumulated from 2005, actually I'll say starting from here, from 2009 to 2011 we accumulated. From 2011 to 2012 August time frame, we had our markup phase, and so those was bullish years. And from 2012 to 2014 we had our distribution phase, and then we had a sell-off from 2014 through the end of 2015, which will be the markdown / participation phase, and that would have been bearish years. And then typically what happens is the cycles repeat. So with that being said, a lot of the time cycles can go for 3 to 4 years. And moving on from that, I don't want the video to be too long. Excuse me. By the way, we're live. I'm not cutting any videos, so I'm gonna give it to you guys raw. And so what I want to do is, first we will zoom back, or we'll zoom into the 1-day chart. Yes, we're skipping over the 1 week, but the 1-day chart is all I need. Actually, I'll go back to the 1 week because I want you all of you to be able to follow along. So what I want to do here is right here, starting in May of 2022, we started an uptrend. This uptrend has just been continuing all the way until today, November of 2023. And so what I'm going to do is make a trend line from the start of this uptrend, which we will say right here, through so right here in March of 2023, we have what's called a, well, actually, okay, starting in June of 2022, we started to go up. We made a lower high from our last local high when we had the sell-off right here. However, we surpassed the local high that we made right after the sell-off. And so we surpassed that high. We took a breather. We surpassed that high once again. We took a breather, came down, found some support, caught some resistance at this high, surpassed that. Here it is. We were attempting to retest the high that we had when we had the sell-off in April of 2022. We failed that. We got knocked down. We found some support right here. We bounced back up, bounced back up. We surpassed the high from April 2022, and we are still in a incline, going a little bit sideways, and then we came across this big sell-off right here. So what I want to do is make a trend line where, and you'll see on many different people's charts, their trend lines can be slightly different depending on the time, the interval chart that you're looking at. Sometimes it could slightly shift your lines a little bit, and at the same time, some people, they will create their trend lines from the bottom of a wick or at the actual closing price. I make my trend lines from the bottom wick, and you're connecting lower lows to lower lows, higher highs to higher highs. So now that we got our trend line, I'm just going to make it a little further, because this trend line is going to be extremely important for a while. Basically, we expect Walmart to stay in the uptrend until this trend line is broken. So I'm going to make this a little bigger. We're going to lock it so it doesn't go anywhere. So we see that we came and found a bounce off this trend line in March of 2023. And then we are now coming up on the trend line again. So back to our charting, because I don't want to get too into I don't want to talk too much about what the stock. We are going to make another video as far as some predictions that I may have on this stock, but as of right now, we're just going to focus on the charting. So currently our major trend is an uptrend. Now it's important to know the difference between a major trend and a secondary trend, because even though the stock is ultimately going up, it's times to where, say once we zoom into a closer time interval, say this 1 hour, you can see, oh, excuse me. Well, actually, okay, this is a great example. So zooming into the 1 hour, there we go. I had to increase it. You see that we're going up, then we're going sideways, then we're going down, then we're going up, down, sideways, down, up, down, down, sideways. So these are all secondary trends. Are not all secondary trends. Some are minor trends as well, but ultimately the stock is going up. But you could see as of the 15th of, or the 16th of November, we've been in a straight downtrend. So our secondary trend as of right now is a downtrend coming down. And so let me see. Let us go to, how about the 4 hour? There we go. All right. So just to give you a good a visual of a secondary trend, I'm going to choose an easy one because even though we're clearly in this downtrend right here, I don't like to build channels off of a fresh drop because they won't always be the most accurate. But say if down here, the 9th of November, if we was to build the channel off this low, oh no, what did I do? Remember guys, I am not deleting anything. This is going to be raw all the way through. Parallel channel. I can hit this right here. Boom. This is a low. Collect. You see how it's touching that lower low right there? I want to keep it going. Keep it going. Okay, so it started to get a little funky right there. It started to break down and then break up. So you knew a move was coming. But when I lift up right here, higher highs. Okay, so let me change this color to something you can see through, and then we're going to zoom in right here. Okay, it's not the prettiest, but you see that these lower lows, actually that's why it's not prettiest. That's my low right there. That's a low. Let's do it like that. Okay. Well, anyway, prime example right here of how people's trends can be slightly different. Like if I wanted to, I could have kept my trend just a little more narrow than this. However, whenever we was having those peaks outside the trend, say if you was in a trade and you was relying on this channel, you know, it can make you panic a little too quickly. So fact of the matter is, I need to be going off this bottom wick right here. And if I bring my trend down to the bottom wick and I link it to this top wick right here, you can see that we never broke out of this channel until eventually we was breaking out of this channel. So there you go for a secondary trend. So we went over our major trends, secondary trends, the phases of the stock market, the 4 stages, and let's cover some support and resistance, guys. So whenever I do my support and resistance, let's go back to the 1-day chart, and I got one more thing I want to show you all as well. So say right here, you see all of these peaks we had a peak right here in September of 2020, and I'm getting a date from the very bottom down here whenever I hover over a position. So we got a peak right here, peak, 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 peak. So all of these peaks is resistance that we've ran into. And so first and foremost, that tells me that let's see, we could make a line right here. All right, if we draw a horizontal line right here, and we'll make this white, make it a little thick, and if you look at this horizontal line, you see that every mountaintop we had below this line either came up and touched that line, or it just about got there, it failed it. No different from this trend line that we have over here that helps us follow this uptrend. Not every single peak is going to touch that trend line. However, support and resistance lines, no different from trends, are never exact. It's typically a broad range. So if support is, say if we have support on a stock, we could look at Walmart right now. We'll zoom into our 15-minute chart. Okay, we see we have really good support on Walmart right now. Right here, we're not dropping below this 155 area, but you see that we found some support right here at 155, 50, 51, 48, 155 flat, 155, 16, 35. You see that? And so you could find support in all of those different areas, because once again, the The bigger money, of course, moves the market. However, retailers, our money collectively does play a part, and that was proven. If you saw the movie, not the Big Short, the Dumb Money just came out. Very good movie. Check it out. And so, with that being said, whenever we do our support and resistance lines, understand that it's not going to be exact, but you know, you do want it to be pretty accurate so that you can rely on it. Otherwise, it defeats the purpose. So, zooming back out, I can see that right here we had a lot of support. You see that we wasn't dropping. Let me see. I'll draw a line for you guys, help you out. Boom. And I'll make this red because it's a bottom support. And you see that we was finding a lot of support. Every time we came down to this red, we bounced off of it, came back up. We'll hit that white line, the resistance, bounce off of it, come back down, come back. And so right here, it gives us a bigger view. Once we bust through this support line, we found more support right here. Now, look left, look right. What do we have beside this right here? We have a mountain peak over here. Actually, let me just draw the line so you can visualize what I'm saying. I will actually draw it right here, and I'll explain why in a second. Okay, I like to make my, even though both those support lines, support and resistance, are red, my lower support, I want to make it a darker red. So whenever I'm zoomed in on a smaller time frames, it gives me a general idea of how low we are. And so right here, you can see that we have a strong support line right here. We have a strong resistance line right here. And coming back up, I can zoom all the way in. You could zoom all the way down to your 1 minute chart, and you're still going to find little small support and resistance lines. You don't want to put too many lines on there because then it will be very confusing. But I do like to put my major support and resistance lines. All right, so as far as the smaller interval support and resistance, I would save my eyes the hassle. So, okay, hold on. I am not, like, this is my legit editing this chart. I'm not going to go back and change it no more once I'm finished. So that's why I'm sorry. This isn't as smooth. What did I do? Okay. But thank you for bearing with me. And thank you guys for tuning in. Ladies and gentlemen. All right. Hold on. There we go. How about this one? Like that. All right. Cool. So next thing that I like to do, or that you definitely should do, is you need to find your gaps, which I probably should have did that before I put my support and resistant lines on here. Let me see if I can actually hide. I don't think it will let me hide my drawings and then still put drawings on there. Okay, so I just want to, whenever I look for my gaps, first and foremost, we go to the 1 day chart because the 1 day is a lot better with showing you all of your gaps. Sometimes if you're zoomed in on, say, a 1 hour chart, it will show you, you know, buying and selling taking place. In actuality, it could have been in a pre-market or in the aftermarket. And so on a 1 day chart, it shows you where at 1600 Eastern time, the market was closed as far as charting goes. So now right here, we have a gap at February of 2021. That was a gap. This gap was closed because if you look to the right of it, in May of 2021, we would have filled this gap. And so scrolling over some more, that gap would have been filled right there. This was a nice big gap in May of 2022. And you see it was filled partially right here in November of 2022, but it was still a missing piece. It was a gap down, another gap down, and then it started gapping up. However, that gap was filled. Now we're zooming in because we're getting close. We have some small gaps in here that was filled coming up. This is actually a very tiny gap right here. So make sure you guys don't overlook that. Keep your eyes on little stuff like this. Now, what's important about gaps is gaps typically get filled. And so whether we gap up or we gap down, normally gaps are filled the same day or pretty quickly. But like right now, if you look at the SPY, if you look at the last video I uploaded, you'll see that it's gaps all the way through it. SPY basically took a crap on us a few months back, and in the past 2 weeks it just started an up war where it's just jumping, and it's on a run. So right here, Walmart, where was that small gap at? Is this the gap? You see my other indicators came back. That is a baby gap. All right, I still want it on my chart though. I don't want to miss it. Any little advantage we can get. Now, charting is very important because what it does is, one, it gives you a playbook. It gives you a game plan. It gives you a foundation to go off of. It helps you to, you know, not find yourself lost when the market opens up. It's already very chaotic when a market is going on. You see prices going up, down, fluctuating. And so when you have charts, you know, even right here with Walmart taking such a crap, I'm not panicking if I have my trend lines drawn out. Not until we crash through that trend line. Now, this right here is the biggest gap that we should be aware of with Walmart. And what I'm going to do is drag this gap over, and I'm going to lock it. All right. And so we have went over our major trend, our secondary trend, our 3 phases of the stock market, the 4 stages, support and resistance, gaps. We've identified the gaps, and now I will zoom out. Oh, and we've even identified a channel. So I will now zoom out, and ta-da, there you go. This is what I would consider, let's pull this over just a little more. I want my gaps to go through the trend because we don't know how long it's going to take for it to fill the gaps, but I don't know, it's kind of something that I do. No specific reason why. All right. So don't forget to hit the like and subscribe, please and thank you. I appreciate you guys, ladies and gentlemen, for tuning in with me today. I just wanted to, this is something that I've actually picked up on in the past year, reading books on technical analysis, watching a bunch of YouTube videos of people, you know, walking me through how to properly chart. And you know, this is something that I found very useful in my trading ever since I have taken it on, and it's something that, you know, I just wanted to share with people. All right, and remember, guys, I'm just here to share my ingredients. It's up to you to create your own recipe. Thank you for tuning in with me today. Peace, love, happiness.